Hi, everybody. This is Alan Elman, the Blue Collar Investor, and welcome to this sample trade video, a trade taken from one of my option portfolios this week. We're going to be using a real-life example with Dutch Brothers Inc., listed on the New York Stock Exchange under the ticker symbol BROS. I initiated this trade Monday morning, June 2nd, 2025, and the contract expiration date is June 13th, 2025. So this is going to be an example of a defensive 12-day covered call trade taken from the BCI Premium Stock Report. Let me show you why Dutch Brothers was one of the securities I selected for this week's portfolios. Okay, I'm showing you now a screenshot of a little snippet of our nine-page stock report we provide to our premium members each week. Now, in the middle row, I highlighted for you in yellow, is Dutch Brothers. You'll notice that the ticker symbol BROS is in bold, where the ones above and below it are not. That means that the chart technicals, as you'll see shortly, were all bullish, not mixed. So that's another plus for this particular security. Now, you'll see here that it is currently ranked number 31 on the IBD 50, making it very strong in terms of both fundamentals and technicals. Now, Dutch Brothers is located in the retail industry segment, which is currently ranked A and was ranked A as well last week. The mean analyst rating, MAR, is 1.47, which is excellent, 1 being the best, 5 being the worst. And the on-balance volume is bullish, up arrow, meaning more cash flowing into this stock on up days than on down days. You'll see here that there is no dividend, but that doesn't affect us in any way, no dividend. And the at the money implied volatility is 46.6%, which is fairly robust. What that means is we can generate significant premium and at the same time establish protection to the downside using an in-the-money covered call and have the protection and the premium at the same time. The next earnings report date does not interfere with this trade. It's August 6th. Okay, now let me show you now a price chart of Dutch Brothers for the past 1 month. You'll see here in the top line in orange, that is the price performance of Dutch Brothers the past month when I entered the trade, compared to that of the S&P 500, the market, the blue line at the bottom. Now, if we were to take a look at the technical indicators that we use in the BCI methodology, you'll see they are all bullish. The red line, red arrow at the top, indicates bullish exponential moving averages, where the blue line 20-day EMA is above the red line 100-day EMA. Price bars are at or above the 20-day EMA, bullish. Number 2, the MACD histogram, which are these blue bars above the zero line. That too is bullish. The purple arrow, number 3, is the stochastic oscillator, and you could see here that it's ascending. That also is bullish. And finally, the volume is robust, meaning that these other 3 indicators are meaningful. So that's the reason why Dutch Brothers was highlighted in bold in the report, and one of the reasons I selected it for one of my portfolios this week. Now, the initial calculations. When I entered the trade, I first purchased 400 shares at 69.38 and then sold the deep in the money, lower than current market value call strike of 63.50. Now that generated a premium of $6.90. Is that all profit? No, it's not, because we're going to be losing money on the sale of the stock that we purchased at 69.38 and willing to sell at 63.50. Now the spreadsheet, the trade management calculator, will break down time value, 102, and intrinsic value, 588, and there you have your 690. So the actual time value profit is 102. Now, that computes to looking in the brown cells now, a 12-day return of 1.61%, 48.86% annualized. You could see here the break-even price point is from current 69.38, and you won't start losing money unless Dutch Brothers drops below 62.48 over the next 12 days. One final thing I want to show you here, that the purple cell shows a downside protection of 8.48%. What that means is we are guaranteed a 1.61% 12-day return as long as share value does not decline by more than 8.48%. And that, folks, is different than the break-even price point, which even has greater downside protection. This is a broker confirmation form of the trades I just executed. On Monday, you could see the shares were purchased at 69.38. How many? 400. I sold 4 contracts of the 63.50 in the money calls at $6.90. And then, of course, those of you familiar with our exit strategy, 20%, 10% guidelines, what I did was I put in a buy to close, good till cancel limit order of 69 cents, which is 10% of $6.90. So that was the trade setup for the initial calculations. Now, my initial returns, as I showed you before, we actually have a total time value profit, initial profit of $408 for the 4 contracts. The actual cost basis, deducting the intrinsic value component, is $25,400, which means we have that 1.61%, 48.86% annualized initial return. Not a final return, but an initial return. Okay, here we are, folks. Welcome. It's 10:30 in the morning on June 5th, 2025. Where do we stand? Well, Dutch Brothers has gone up significantly. At 10:30 a.m. on June 5th, it's $77 a share, which is $7.62 above the price when I executed these trades, and $13.50 above that in the money call strike. So we have huge protection of that initial time value return. Better than that even is that we are $14.52 above the break-even price point of 62.48. Now, up to this point, I haven't needed or used any exit strategy intervention, but the mid-contract unwind exit strategy, MCU, is a possibility if the price continues to rise, and I am keeping an eye on that. So, to summarize, we could generate significant returns, even with a 12-day defensive covered call writing trade. We can craft our trades, calls or puts, to align with the current market conditions and our personal risk tolerance, as long as we can achieve the return goals that we're seeking. In the case of Dutch Brothers, we have a significant initial return and currently is in a very favorable position to end as a successful trade. Time will tell on that one. So, folks, that ends this sample trade video using Dutch Brothers Inc. It's a defensive trade. I've been using mostly defensive trades in the current market environment. I do use some more aggressive ones. I'll be showing those videos as well. Hope you enjoyed this video. I hope you benefit from it. And as always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.